Short Bitcoin, long gold. I know what you're thinking. What the hell are you doing? Bitcoin is the new gold. Why would anyone do this? Well, I originally saw Kevin Muir post an article saying this, and boy, did it just catch my attention. So I think I'm going to put on the same trade, and we'll just kind of explain it and go over the rationale behind it. I know what you're thinking. Why would anybody short Bitcoin? It hurts. Trust me, it hurts my stomach to even think about the potential downside risk because Bitcoin just is an absolute rocket to the upside, but it's also a rocket to the downside. The thing is, trades that are often the hardest to put on are sometimes the most profitable. And even if you're wrong, it is one hell of a gut check. And boy, do I need one. So, Justin, what are your thoughts about shorting Bitcoin?
Well, I would say everyone's going to short Bitcoin. They have a much stronger tolerance for risk than I do. Um, I would say you talk about your gut feeling bad, but if you short Bitcoin and get on the wrong side of that, it's not your stomach that's going to be feeling bad. It's going to be another part of your body that's going to be feeling really bad. And
Yeah.
we'll just kind of keep this PG rated. But yeah, you're you're going to take a beating on that front. Josh, so me speaking for myself, going short Bitcoin, that's not something that I personally would feel comfortable with. I just have no idea of how to model it. I have no idea of the
How do I put on the trade? If Justin won't do it, then I know. As
yeah.
long as Justin said that he would put on this trade, then I knew I was not going to do it. But I
I
know it
mean,
will. So
so
I'll,
Josh,
I'll I'll tell you, Justin. First, let me explain how I'll go short Bitcoin because trust me, I would not just short Bitcoin with unlimited upside. I would find one of these companies like Base BTC or MicroStrategy, which actually trade at a premium to the price of Bitcoin, and buy puts on that. So you have your defined risk or selling call strategies, or like just collecting premium, just
yeah.
any way where you have your defined risk to the downside.
Going short on MicroStrategy, yeah, that's something that I would consider doing.
Yes,
I
and
think I felt
you
like
you talked about this a while ago.
yeah, I felt
So
like it's ongoing put, but I just keep rolling forward just for grinsies. But yeah, I suppose I can see myself doing that.
and I'm just saying if one of these when these trades are extremely hard to put on, it's often the best time to do so. When everything is just seeming to go right, that is when it most likely will go wrong. But why the long gold? And before you say gold is dead, trust me, I know. And that is why we love it.
Like I really think the way to play, and this is something that I put a lot of thought into myself, is rather than hold a stable bag of USDC or whatever your preferred flavor is of a dollar equivalent token in crypto world, I think it makes much more sense, and you can diversify yourself out of the asset class of crypto and get yourself into another asset class, precious metals, and basically just buy gold. Oh, and coincidentally, you can also borrow against your gold too. And so I definitely like the idea of cashing out crypto gains, and for lack of a better way of saying it, saving your financial. It's like financial. It's like playing a video game. It's a checkpoint for your financial progress. You basically put yourself, or you put a large part of your stable bags back into gold, but you put it into or you store the gold in a way that you can borrow against it should you want to borrow against it. And actually, Josh, that's probably how I would play it if I wasn't looking at shorting a company as a proxy of shorting Bitcoin. What I would then do is I would take my stable bag, buy metals, put the metals into a loan facility or credit facility I could draw against, and then have the cash ready to go. So that way, if Bitcoin or whatever does drop back down to, well, let's say an attractive entry point, then I would wave the magic wand, pull out cash, and buy back in on that point. So I guess what I would say is I don't think I would actively short Bitcoin again, completely setting aside, buying a put or something. But I do think I like the idea of amassing a bit of a war chest so that you could so that you could enter or re-enter a position at a more favorable price.
Yeah, and I'll tell you, this is something that Justin has actually done and explained to me thoroughly. It is an incredible trade that I really, really like. I do not own much physical metal as I am much more of a trader. I'm mainly an options trader at that. So I have some of the over leveraged or safe blue chip mining stocks, as well as some of the gold ETFs that I have long dated options on, which I've had for a while and I've gotten crushed that I keep on buying more of. And I keep on getting crushed because gold continues to go down. But hey,
Um,
JP Morgan or whoever is doing this, I thank you because we're just getting in at a more favorable price. And I believe the fundamentals are there. These companies are trading at some below 6 times earnings, which is just unheard of. Raising dividends, buying new companies, share buybacks. These companies are in the greatest position I've ever seen gold and silver companies at. So I'm
yeah.
happy to buy more. And I think that's a great hedge against Bitcoin because people people are buying Bitcoin for the same reason gold usually goes up. So if Bitcoin continues to go up, I think we could see a situation where gold and Bitcoin goes up together, or gold outperforms Bitcoin relatively on the downside if everything's crashing, but you would obtain much more gains from your Bitcoin drop, as it's much
Yeah.
more volatile than gold.
There are two observations I have. So think back to Brent Johnson's dollar milkshake theory, which is basically, I guess, the application of Gresham's law playing out, where you basically have a foreign currency seeking or fleeing to perceive safety in the US dollar. My point from this is that I suspect that the US dollar will end, or if not end, will transition into the next phase by melting up. But I also think crypto land will be like the inverse of the dollar milkshake theory. It'll be a scramble for collateral, and I don't think there's not enough collateral there. So just as the dollar will melt up, my suspicion is crypto land will melt down. I don't know. Think of this as just more amusing, like just me shooting from the hip. But I suspect that's what you're going to see happen in that regard. In any event, what I would say is for everyone who says that they think they've gotten themselves checked out or checked into, either a USDC position or a stable bag position, be very, very, very careful with that. Because yes, you might be diversified within the asset class of crypto, but you're not diversified out of the asset class. And I think, as Josh has said many times before, I think the precious metals are an excellent counterpoint to crypto, and vice versa. I think crypto is an excellent counterpoint to the metals. I'm always disappointed when I see antagonism between the two communities, because I think they're very much fighting for the same thing, and I think they are incredibly complementary, very,
Yeah,
very much so.
yeah, and, trust me, I would love to see cryptos crash back to 2019 levels.
Yeah.
And I think that is something that is highly probable. If Tether blows up, the amount of margin in the space will just absolutely decimate the price. The big guys will get out as the volume just
Yeah.
is depleted. People, the big guys, they only, let's say you're managing $15 billion, you have to go into an asset class that is volatile enough to where you're not moving the market, or you just physically you can't buy in. And
Yeah.
if Bitcoin just if Tether blows up and all these other entities get out, there won't be the volume there for these big guys to get in, and that's where us little guys have the edge in these. And what I'm doing now, the pot stocks, the shipping stock that are there, that are micro cap stocks, the uranium, gold miners, that these guys just can't get into. So you have an edge where you can fundamentally analyze these companies, and these guys, it's not even on their radar. JP Morgan is not looking at any of these because they're too small. And if they wanted to buy in, they would just completely take off the market.
Yeah, and I'll just give you two other counterpoints for this. First counterpoint is, consider what Rick Rule talks about. If we just have a return to the mean of precious metals investing, there will be so much money going into or moving into a sector where there's just not a lot of spare capacity to absorb it. So there's that, and that's just returning to the mean. From that, the second thing is, we've all seen, I mean, not so much, this is beyond the scope of this video, but if you're watching this video, you're probably familiar with the concept that when you have, ever since the money printing, hear me out, has been going on, you've seen an increase in financial assets. The point is that what the financial asset prices are serving as a sponge to soak up the excess cash that has appeared on non-bank entities' balance sheets. And much the same way, I suspect that the money printing going on with Tether is inflating Bitcoin, and as Bitcoin inflates, it inflates the rest of the crypto space. But at the same time, too, if Tether's doing the inflation, if Tether suddenly disappears or there's an issue, and you decide what that's going to be, you'll see deflation. And if Tether goes down, then that takes Bitcoin, and Bitcoin goes down, it's probably going to take the rest of the cryptos with it. Now, how far it goes down, that I don't know. But the point is that everyone can see asset inflation in the market. That is the real estate market, equities market, or whatever, again, from printing dollars. And if you're printing digital dollars, aka Tether, you kind of wonder how much is that pumping the price of Bitcoin, and what happens when that pump is no longer there.
Oh yeah, yeah, absolutely. That was fantastic. And I'll just do some clothing statements on my actual views of the market, because you have to have the macro view, looking tops down at the market, to decide what you're going to do. You could be absolutely the most bullish you could be on a company, but if you're bearish on the market, that the two don't mix together. If the whole market's coming down, everything will come down regardless of fundamentals. So short term, I'm very cautious. As there are a lot of risks, but well, super short term, let's say over the next 2 months, I'm pretty bullish. But looking out, say 6 months to a year, I think the probabilities of a deep correction are extraordinarily high, as there are just so many headwinds coming up, especially if no new stimulus is getting passed, with Build Back Better getting shut down. That is a humongous headwind to the stock market, as if we are correct when we think that the financial markets are now run off physical stimulus. So if that's drying up, that is going to cause, I believe, a crash. Which, and if I look in the medium to long term, let's say going out 2 years, what happens when all these asset classes deplete and the that crashes the real economy? I believe that the response to that will be more physical stimulus that will be agreed upon by all politicians, which will then give another massive boost to the stock market, where we could see a 1.5, I mean, like something absolutely out of this world for a type of gains. I don't know if it'd be in nominal or real terms, but I believe that in nominal terms, at least, the stock market would be rising incredibly fast.
Yeah. We will all look rich but feel poor.
All right, Justin, any final thoughts?
Josh, I think that's pretty much it.
Closing statements. I have not yet put on the short Bitcoin. I am long gold, but I am proceeding with caution. I like the idea of that downside protection. If asset classes are coming down, I can assure you Bitcoin will be coming down with it, and it will be coming down pretty damn hard, as it's just the leverage. When you see something everyone's piling into and the leverage is at this high, it just has to correct. People have to be flushed out of their over leveraged positions. It happens over and over and over again.
Yeah.
So we'll see what happens. All right.
Josh, till next time.